calling the meeting into order. Dr. Aguilar, would you like to lead us in the pledge? Agenda item is to review of audit results and presentation of the 2019-2020 Comprehensive Annual Financial Report, CAFR, by External Auditor Burton Coulter of Coulter, Salvin and Company.
Thank you, Mary, and members of the board. And as Mary indicated, we're here to go over some of the high spots of last year's audit, which is for the year ending June 30th of 2020. And of course, everyone has the 175-page report, which is mandated that we have to present this. And of course, you receive certifications for the magnitude of this comprehensive annual financial report. But I'm not going to try and go through 175 pages. We've extracted certain pages that we want to try and highlight and go over with you here today. And that's on the separate little bound book that you have before you. And also there should be a separate insert that I've given you, which I'll cover later. Just to get started, first of all, we don't have any management letter comments that are required to be submitted to Baton Rouge, which is a good thing. You didn't have any last year and the year before, so that's all good. And then on the internal control and compliance, we have one item on the that's a finding this year, and it's on the last page of your handout, and it's one that you've seen before. It's one that you've seen before. It entails the school activity department and the external audits that were provided each year. And anyway, we're still lacking some controls here, and we need a little bit of improvement. Now, let me just mention this, is that this school system, and we audit 10 other school districts, okay, in the state. Your policies relative to school activity funds and testing is extensive, and it's tough. It's really difficult. So other school systems could not pass this, in my opinion, on some of the ones that we do, and they would have several findings. You're down to only one. So you should be commended, even though, but you know, it is a finding. You have a stringent policy for people to adhere to, which is commendable. So I want to compliment you on that, continue that, and hopefully we'll continue to move forward and eventually get this eliminated. Any questions relative to this finding? Okay, hearing none. It's the page 23 of the small book. Yes, ma'am. You have, it's on 23 and 24, Kate, but it's really on 23, the finding for 2020. It's labeled 2020-001. And as you can see, the finding says there were inadequate controls over funds collected for various fundraisers. That's always been a sort of a stickler, and activities at the individual schools. The school board should closely monitor these activities in order to ascertain that the policies and procedures are being adhered to and take action regarding those not being properly performed. And like I said, you've done a great job. This system has done a great job with that, but your policies are very stringent and so on. Yes, ma'am. How to do it. We've met with your staff, and they are in the process or have done that as we speak. Am I correct, Billy? Yeah, you do a great job with that, and Billy didn't follow up with it. And Kate, in case you don't remember, we do have, you have an internal audit staff, and they do several of the schools. They do probably half or a little bit more than half. The other half, y'all engage us to help you with this, because you'd have to hire additional personnel to cover all schools. So all schools are covered on an annual basis, which is fantastic. And secondly is that we alternate it. Like, they'll do some one year, we do them the next year, vice versa. So it works out pretty well. We've been doing this, or you've been doing this for a number of years now. What you think, Billy? 4 or 5? 3? Okay.
Mr. Calder,
Yes, sir.
do you guys have any data that suggests that we're inching closer to compliance or not? Because this has been an annual finding, and Mr. Billy and the internal accounting department, they work tirelessly to try to improve practice. So
As we proceed further with the implementation of the being able to make the deposits electronically and so on, it should get better.
So we added some additional staff to the larger high schools.
Correct.
Any data on whether or not the high schools have gotten just a tad bit better in compliance, or yes?
That's not better. We see some improvement. You asked about the progression. We do see some, and so but you have stringent policies, as you're well aware.
The movement of those people has been a success.
And we've hired, what, one at each high school, all that?
We have four that are shared.
That share here. Okay. Good. Any additional questions? Okay, hearing none, let's go on and go now to page 3. We're gonna talk a lot about the general fund. I'm not gonna read every line item beginning on page 3, but we're gonna hit some of the high spots and some of the larger items so that we can comment on those and, of course, answer any questions that you may have. On page 3 is the general fund schedule of revenues. It gives you the final budget that was adopted by this body, and then the actual numbers for 2020, and then, of course, the variance from the budget, and then, of course, on the far right, you have the 2019 actual. You're very close to budget. If you can see, look at the bottom line total revenues, you budgeted $279,879,000, and you came within $125,000 of that. That's extremely close on this many dollars. So almost $300 million, and we're within $125,000. So that's exceptional. But I'm going to focus on looking at the line items on 19 versus 20. From parish sources, and again, this format is required by the Department of Ed to be reported on. So when you look at other school systems, it's going to be consistent in the methodology and the presentation of what's there. Ad valorem taxes, $75.9 million last year, went up to $77.5 million this year. About $1.5 million more. It's about 2.1% increase in property taxes. I suspect maybe this year, Matt, if y'all have the numbers, it may be down a little. Sales tax revenues. Last year was $73 million. This year we're at $76,180,000. Again, up almost $3 million in sales tax. And this is great. I mean, we're seeing this with a lot of our governmental clients and governmental entities. I know when the pandemic started, it was forecasted, some of them as high as 21% reductions, and yet we've seen increases. The ones that we've seen some reductions is basically City of Lafayette has had a slight reduction, but all of the surrounding cities here have all had an increase, and parish-wide, like the sheriff's office and this office, of course, is all parish-wide. All of them are increases. So we're seeing this pretty much throughout our client base, and in particular here in Lafayette Parish. Interest on interest-bearing deposits, $2.6 million last year, $1,877,000 for the current year. As everyone knows, rates are down, and down quite a bit. Rentals, leases, and royalties, $472,000 last year versus $582,000 for the current year. Other revenues, tuition, summer school, and driver's ed in the general fund was $390,000 last year. It's $255,000 for the current year. Now, I would think that the COVID probably had some effect on this. Yep. And miscellaneous, there we had a big reduction, $436,000 last year to $57,000 this year. We had some refund last year of about $300,000 of some refund for some books, and that was included in last year's. We didn't have such a thing this year. Total, for parish sources was $153,152,000 last year. It's $156,478,000 for the current year. So it's up approximately $3.5 million or $3.3 million over the prior year, which is great, mainly in the sales tax and also property tax area. Now, from state sources, from the based on the number of students and the equalization that we get, it's $126 million last year. It's $138,624,000 for the current year. It's up $12.5 million. And the number of students increased, and also, if you recall, there was an additional $500 for each personnel that was received from the state. Other revenues, revenue sharing was $2.2 million versus $2,141,000, and PIPs $45,000 versus $34,000. Non-public textbooks $210,000 versus $188,000. State sources $129 million last year, up to $141 million for this year, and of course it's up about $12 million, which is what I mentioned earlier from the public schools fund of the state. Federal sources went from $98,000 up to $236,000. You had some FEMA from the prior year that was collected and collected this year, so that's why that number is up. And as I mentioned, $281,800 in revenues last year, and $297,754,000 for the current year. Okay, going on to page 4, we'll look at 4 through 10. I'm not going to read every line item here. We're just going to make some comments. Let me first start by saying that in most cases, you're going to see that the salary information, the salaries have increased over the prior year, and also, of course, the benefits would have also have increased. But in total here for regular programs, and again, the format here is required by the Department of Ed. Total regular programs, $106 million last year, $111,900,000 for the current year. As always, I talk about the allocation to charter schools. Look at the last line item in this category. Last year was $12,936,000. This year is $13,460,000. So that's all of the allocations to the charters. This is based on the per pupil amounts that you would get. That has to go over to the charter schools because they're educating those kids. It's an issue for all school systems because you have a lot of fixed costs, and yet it wouldn't cost you any more to educate these kids if they were in the system. Our fixed costs would not go up because they're there. So, but it is what it is. So, and as you can see, very close to your budget. Special education programs for salaries and all of that, you can see those, but the total was $30,119,000 last year, and it's $30,686,000 for the current year. So it's very, very close to last year's number. Next page, on page 5, is vocational ed. Again, this one is very close. The increase is mainly in the teacher salaries and so on, and the benefits. Last year was $4.8 million, this year $5.2 million. Please stop me if you have any questions that we might be able to answer on any of these if you see something that you have a question about. Other instructional programs, last year was $5.8 million, this year it's $3.5 million, so it is down quite a bit, mainly in the salary areas, and I think there was some reallocation of certain cost here is the reason for it. Sometimes, in some years and in most years, the state makes certain changes that are mandated to be shown elsewhere into their system, the AFR system. Special programs. Last year was $8,885,000. This year is $8,954,000. So up slightly, mainly in the salary area. Support on page 6 on the pupil support. Last year was $19.8 million. This year $20,458,990. So again, salaries would be a main driver in most cases here, and it is again in this particular category. Instructional staff support salaries or services was $10,180,000 last year. It's $9,949,000 for the current year. Next page would be the G&A, the General Administration. Of course, the board members, the superintendent, the clerical staff, and so on, and various services are included in this category. And you can see also the sales tax office expenses included, which is a fairly significant item, as well as the pension fund deductions that are coming off the sales tax roll. That's all shown here. That's some big items, $800,000 in last year and $888,000 in pension fund right at the middle of this category. One thing that you might note went down last year, judgments went from $1.4 million down to basically half at a $793,000. So that litigation type expense did go down. But total for G&A went from $6,014,920 to $6,304,000 for the current year. Now, under school administration, that number did go up. It went from $18,451,000 to $20,537,000. And again, the salaries, if you add all of those items up for principals, assistant principals, and so on, that's up about $1 million from the prior year. And of course, the employee benefits that go along with that is up another $300,000 or $400,000 as well. And in purchase services, here went from $611,000 to $1,276,000. That's an increase due to dual enrollment tuition that had to be paid, and that's $1,276,000. So it doubled here. Okay, next page is your business services. I'm sorry.
Can I ask a question? The equipment, it went up from 19,000 to 120,000. What was that?
Right offhand, I don't know.
No.
Any of you guys?
It's probably, is it a one-time, you think, purchase, or it's a
It probably is, Kate. It's
year over year?
Yeah. I don't have the number from
That's
the
okay.
prior year, but I don't know specifically. I would think it looks like it's maybe a one-time type
Okay.
of thing for that particular.
Okay.
They used to rent copiers, but then the board about 5 or 6 years ago put $150,000 aside for us to self-finance copiers. So we avoid up to 20% interest on these leases.
Mhm.
And also the schools keep their copiers longer. But at some point the copier does wear out and you do buy it. So if you buy the copier, then the school rents it back, pays us back over time, but we don't skip the interest charge that some of the copier companies would charge.
Okay, and then you said the purchase services, is that dual enrollment? Is that what you're saying?
Yes, ma'am.
And that, we expect that to be an annual expense now?
Yes.
Okay, thank you.
Okay, page 8 is going to be the business services. And there went from $2,931,000 up slightly to $2,989,000. Operations and maintenance of plant services, pretty consistent, $27.9 million last year, and this year $27.5 million. And this is what I was pointing out. I mean, our plant services for our facilities doesn't cost us really much more to have, more students we can accommodate. We wouldn't have to pay the $13 million if we had them here. So it wouldn't cost us $13 million, put it that way. Okay, on the page 9 is the student transportation. And this one went down in total, went from $17.2 million to $17,049,000. And I can remember not too long ago, these numbers were into 20 million. So y'all have done a great job with this and modifying it and controlling, better control over the student transportation expenses. Central services, last year was $5,241,000, this year's $5,065,000. And that's mainly, I think, the IT area, if I'm not mistaken, for central services. Next category on page 10 is food services. You've got some items here, salaries and benefits. It was paid by the general fund due to the COVID-19 this year. So it might, maybe it'll continue into next year a little, but hopefully not as much. But this was sort of a one-time type thing with this COVID situation. Purchase services, pretty close, $104,000 to $129,000. Facilities acquisition paid in the general fund was minimal. And you can see the expenditures. Last year, $264 million. This year, $270,832,000. So up about $6 million from the prior year. If you would, let's go back to page 3.
Can I ask one question about the salaries?
sure.
On food services? We budgeted $4,000 total for salary? And it was,
That's what was paid in the general fund, and when they did the budget, they didn't anticipate paying that from the general fund.
okay,
Yep.
okay, thank you.
Okay, let's see, page 3. So let's go to page 2. Page 2, we've looked at all these categories and these subtotals of the revenues and the expenditures. And on this one page, it's going to give you the original budget that was adopted by this board, and then the final budget, which is what we just looked at the comparisons on. Of course, the actual numbers that we just looked at, the variance, and then the actual numbers for 19. But on one page, it's basically an income statement for the general fund. And you can see, I'm gonna look at total revenues. Last year was $281,800,000, which we just looked at. This year is $297,754,000, up about $15.9 million. And if you remember, we got quite a bit more money, about $13 million or so, from the state for the additional $500 for salaries, as well as some other items that were in there. So that's the bulk of the increase. Now, on the expenditures, we just looked at all the different categories, and total expenditures last year, $264,062,000. This year, $270,832,000. And of course, you can see then our excess of revenues over expenditures. So this is the amount we have available to either transfer or just keep in the general fund. Last year, that number was $17.7 million. Look at the number this year, $26.9 million. And of course, you transfer some monies out. Some is in self-funded construction and so on. This year, you were left with a surplus in this fund of $2 million. And your total fund balance is at $66,448,000 this year. Of course, last year was $64.4 million. We gave you all a separate handout that I'd like to go over, that everyone should have before them. It was a separate page, not bound. And I think now is a good time to look at this. That excess before transfers is the number, and we have 4 years, and of course I put a total on the far right, but you can see the 26 million we just talked about, and then the 17 million last year, and of course we have 18 and 17 on there. So for the past 4 years, you can see it's been averaging about 21 million a year, and this year was a little bit higher. So we're at a total for the 4 years of $83 million. That's what we have available to either transfer. Now, what have you been doing with this is you can see for self-funded construction, basically 10, and last year in 19 it was 13 million, 18 was 39 million, I'm going to address that in just a minute, and in 17 was 11 million. What happened is in 18 is when we changed the policy, or the board changed the policy of keeping 90 days or 3 months versus 75 days as our cushion or as our equalization. And so that's why there was some additional monies that were transferred back from our surplus and were transferred out to self-funded construction. But the point I want to make is that for 4 years, over the last 4 years, we have transferred out into self-funded construction $76 million. And that's phenomenal. That's great. I can remember a number of years ago where this board was struggling. We didn't have much. We didn't have 30 days of surplus, and with no cushion at all. And we weren't transferring anything to self-funded. And so y'all should be commended. I mean, this board and the previous ones before them, and it's been for a number of years now, you've been doing this, setting this money aside so that we can construct new schools. And Ben and I were talking earlier, I think we might have like 3 new schools that we'll be constructing within the short period of time. And of course, then capital improvements, this year we transferred an additional $7 million there. Debt service, again, that's I think in anticipation of some further debt, but we transferred that into debt service fund, and then other transfers are minimal most years. But the point is with 83 million, you've transferred $76 million to self-funded construction and another 7 million to capital improvement. So most of the transfers have been going to future projects that we're going to try and pay for as we go. And our excess after transfers, of course, it's a deficit because we transferred that extra money in 18. But I think, Billy, correct me if I'm wrong, your intent is to try and see whatever it is to take the equalization, but to hopefully, to meet the equalization requirements, but to go ahead and try and keep at least $2 to $3 million in there on a rotating basis or on an annual basis.
Correct. Mm-hmm.
Any questions on what I've just given you? Let me just say this, most school systems cannot do what you guys have done. So again, you should be commended. I like what y'all are doing. Let's continue with that. Any questions relative to the general fund?
I have one question,
Yes,
just so I
ma'am.
understand what you're saying. We're gonna take from our excess and we're gonna give back into that fund so that that 22 million that was a deficit in 18 will now be
It's in
in excess
self-funded.
of 2 million. We're gonna take 24 out of the self-funded?
Well, what it shows is what we've been transferring to self-funded from general fund for the past several years. That's a total of 76,020,000. In 2018, that's when the board opted to reduce the stabilization funds from 3 months to 2.5 months.
Mm-hmm.
So it's more of an accounting issue. So the only way to reduce the fund balance is to incur a deficit.
Right.
So that's why we wanted to get all of the transfers that related to that board decision in that 1 year. We knew it was going to create a deficit, and we wanted it to restrict that deficit to 1 year. So in essence, you think about it, it's sort of like withdrawing from the savings account.
Mm-hmm.
Well, the way you can do that is by incurring a deficit. So that's why we have that 1 year of deficit, because it was such a significant, we decreased from 3 months to 2.5 months, plus we also transferred all unassigned fund balance. The amount that we had in fund balance over and above the 3 months, we transferred that too. So that's what created the $22 million deficit for that year.
Mm-hmm.
But our actual fund balance is well in the black.
Okay.
Yep.
Thank you.
Because this money was sent over as a pay-as-you-go type / debt issuance to build the 7, 8, whatever wings we're still building over now.
And each wing was approximately,
Remember how much each wing was?
just an average of how much each wing was?
They ranged in the $6 to $8 million range.
So basically, in another sense, Kate, what we did, or what Billy did, is transfer from the general fund savings account and put it into the self-funded construction savings account. So it's all both of them of which are owned by the school system. So it was a good move, and you know,
So if
and
we,
obviously it's worked okay.
yeah, and so if we don't do it each year, Kate, we put ourselves in a situation of having to create another deficit to get to it. And we don't want to do that. So from a bonding, when we get rated for bond purposes and they see these deficits, we can explain them, but we'd rather not be put in that situation. We'd rather them see a surplus each year. And we have one year we've explained and they understand it, and it's almost a non-issue at this point. We've explained it to them in the past when we do our bond rating meetings.
And I think now is a good time to maybe look at the stabilization. That's on page 14. If you just want to look at the number, and it's based on the general fund final budgeted expenditures after the effect of group health. It's on page 14, just to show you the computation of it. And it's $278 million is that factor, and then you, of course, the 20.83% is 75 days. Is what it is, 2.5 months, as Billy indicated. So the stabilization as of June 30th, is right at $58 million that we have in stabilization. And if you flip back one page, and then I'm gonna get into the balance sheet, give you a snapshot, but back one page on page 13, the fund balance that we're gonna look at in just a minute was $64 million in total last year, and it's $66 million, And you've got some non-spendable items, you've got some restrictions. The biggest item, of course, is in the economic stabilization that we just looked at 57 million. And of course, we have 600,000 dedicated or set aside committed for workers' compensation. And then you have some assigned categories for loss contingencies. You've been having $1 million that's set aside for possible loss contingencies not anticipated, and then subsequent years expenditures, which is basically some POs that have been issued as of year end, and that number fluctuates. The unassigned is 2.1 million, last year was 1.3 million, and the total is 66 million versus 64 million. And at this time, I think it's good if we'll flip back to page 1. And we've looked at the operations for the general fund, looked at it quite extensively, and now we're going to go to the general fund balance sheet, which is a snapshot as of June 30th of 19 versus June 30th of 20. And it indicates, of course, all your assets. Your cash and interest-bearing deposits went up from 75 million in the general fund last year up to 80,900,000 this year. Investments, 37 million versus 37,856,000. Remember, we looked at it earlier, and I mentioned that the rates went down. Your investments really didn't go down in balance, but the rates that we're getting, or that you're able to get on your investments, is the reason the interest income went down. Of course, you have receivables. The biggest item is due from other funds. The general fund pays a lot of expenditures and then charges it back or is reimbursed by the sales tax, but mainly the special revenue funds, which is federal monies. And those are repaid once you've spent the money. The general fund spends it, charges it to the other funds, gets reimbursement, and then gets repaid for it. But the total assets of your general fund last year was 131,356,000. This year's 134,918,000. And a lot of it, of course, is the cash and investments. If you look at it, we had 117 million of that is in the form of cash and investments. Now, the debts of the general fund, you can see the totals, again, due to other funds because they got monies going back and forth. But the big items are the accrued salaries. Remember, school system ends, let's say in May, but you also have salaries that you have to pay. Some of them are 12-month salaries, so you accrue those. You owe those as of the end of the school year, even though they don't have to work during the summer. So that's why that number of accrued salaries and benefits is 31,000 or 30,600,000 last year, 31,200,000 this year. That's the bulk of your debt. And total liabilities in the general fund, 66.9 million last year, 68.4 million for the current year. Your fund balance, we just looked at it. It's all broken out here. You have the details. I think it's on page 13. But the biggest item is in the committed, which is the economic stabilization of 57 million. Of the 58 million is that. So again, very healthy, strong financial position. As you can see, your reserves are basically half of your total assets, which is strong. Any questions here? Okay. Let's go to page 17. I'm going to skip around a little bit here, and I just want to point something out. This is the group self-insurance fund, and it's something that we always want to look at this because page 17. It's something that you continue to, I know you know this, continually need to tweak in the form of, are we charging enough for the premiums, or our benefits need to be adjusted, whatever the case, based on the expenditures that we're spending. Let's look at this. We brought in from charges for services, which is either what the general fund puts up or what the employees put up, but a total of 56.8 million last year, 56,858,000 for the current year. Pretty much the same. It's pretty much similar. Now, let's look at the expenditures. Contractuals went from 3,263,000 to 3,526,000. Premium payments went from 2,775,000 to 2,600,000. Claims payment did go up about 2 million, from 51.3 million to 53.3 million. And in other operating expenses, virtually close at 712,000 versus 700,000. Total expenses, 58,102,000. Last year, this year, 60,156,000. Operating loss last year was 1,292,000. This year it's $3,298,000. Then we add back the non-operating revenues of $153,000 from the interest. Again, you see the interest is down here, and last year was $289,000. Opeb expense, this is a non-cash expense that you have to book. It was $4.5 million last year. It's $2,485,000 for the current year. Net loss for this fund, pretty consistent, $5.5 million versus $5.6 million. But look at the very last line item, and I want to point this out, the net position without OPEB. That's basically your cash loss. It was a cash surplus, I should say, the net position that you have available. You can see how it's dropped. It went from $6,817,000 last year to $3,672,000. My point is our reserves are dropping because we're operating at a deficit, and hopefully the insurance committee and members of this board are looking at this to do or make modifications, and maybe they've already been made as we speak. I don't know. They have.
Yeah, the board approved a premium increase effective January 1, and then the Ag WIP program that became effective January 1 as well. So we are monitoring it monthly, as we always do, because with this fund balance, there's not much room for error. We need to make sure that it's generating the savings that were projected.
I agree with Billy. Having a $60 million of expenditures on an annual basis with a surplus of only $3.6 million as of year end is not very strong. So I'm glad y'all are out in front of it, and you normally have. We don't want it to go in a deficit position and so on. So we want to be proactive with this, and I appreciate y'all doing that. Okay, next thing we can look at is we just go back to page 11. We're going to start looking at some comparisons. Does anybody have any questions of what we've gone over so far? We look at the general fund quite heavily because that's the fund that you can control. The federal revenues and expenditures from the federal programs, basically, if you expend the monies and they qualify, then you get reimbursed for those. So not a whole lot to do there, but the general fund you do have a lot of control over. So I was going to start with page 11 and just make some analogies and some and here we go into a per pupil type of situation. I apologize for it being small, but unable to fit everything on here, it has to be this size. And you can see we have 4 years, 17, 18, 19, and 20. The big thing I want to look at is more of the per pupil items. The number of pupils is identified in the second column, 31,994 for this past year. Last year, the year before in 19, it was 31,443, and then of course 30,547 in 18, and 30,171. So I'm going to look at the columns right beneath that because it's all based on a per pupil type thing. Revenues, you can see, are pretty consistent from the parish sources coming in. From the it's about 52%, 52.5% this year, or $4,891 per pupil. Look at last year, $4,871 per pupil. It was $4,900 the year before. It was $4,900 the year before that. So pretty consistent at $4,800 to $4,900. State sources, on the other hand, in the past has been around $4,000 way back 4 years ago. Then went to $4,200. $4,100 last year. This year it's up to $4,400. Well, we all know that. We got some extra monies from the state for the increase of $500 per for each one of the employees. So, correct. That's
so that
correct.
could cause a little bit of an anomaly.
It does. It
Per
does.
student increase that's not really ours because of that transfer out.
Right, but then you transfer it out, so we'll show it in the increase in the expenditures as well. But total revenues coming into the general fund per pupil, it ranges, it's been hovering around 8,900 to 9,100. This year we're at 9,300 per pupil. Okay, now the expenditures. And again, we have it broken out by instructional expenditures and in direct student-related services, which is all supports for the pupil and for the education program. And you can see direct instruction was $5,000 this year, $4,900 last year, $5,100 the year before that, and $5,070 before that. Direct student-related expenditures or services, those have been hovering around $3,000, $2,800 to $3,000 this year. And as Matt pointed out, the regular programs, that number, if you remember, that's where they charter schools, which is about $13.5 million that was shown as an expenditure this year. It's included in that regular program item. But it's been that way for the prior years as well. But total student expenditures here at this system, last year we spent $7,900. Year before that was $7,900. Year before that was about $7,900. This year we spent $8,000. So pretty close to the $7,900 to $8,000 for all years presented. Our other support, which is G&A, business services, central services, and community service programs, $452 per pupil this year, $454 last year, $507 the year before that, and $430. So pretty consistent every year, except for 18 was slightly higher. Total for general fund expenditures, we're spending $8,464 per pupil this past year. We spent $8,400 last year, $8,489 in 18, and $8,308 in 17. So our excess before transfers, remember we talked about this, before we transfer the monies out, we ended up this year with $844 per pupil. Last year was $565, year before that was $647, year before that was $620. Very consistent. And this year is the highest of the 4 years presented. And of course, as we know, we've transferred those monies, a lot of which goes to our self-funded construction type items. Any questions here? Okay, hearing none.
Can I ask one question?
Yes, ma'am.
I saw the MFP announcement today about they're gonna get, what, 400 per teacher, I think, and 200 per, support staff. Is that, so that's gonna be down from last year's MFP number?
That's the governor's recommendation.
Okay.
These raises, they continue in what they call level 3 or level 4. So what they do, they divide the total by the number of students, they multiply it times the number of new students, so assuming that if you get more students you hire or lose teachers, to pay for the teacher raises. So when they add the 400, they added an additional MFP for the teachers that work that year, or I think it was 400 to 100. Is it 400 or 100?
I think it's 400 and 200, yeah, for the support staff.
200? So
Mhm.
yeah, that's the proposal from the government
Okay.
at this point, or the proposal from Bessie.
Okay, and then secondly, I know we have 2 new charter high schools. Have we done any calculations on that yet?
Yes.
Okay, because I know Larka is also gonna open a high school as well. So, okay, thank you.
The important thing to keep in mind that, is, when they mention a 1.375% increase, and that increase is to fund that 400, 200 salary increase, that those funds are expended. So they've already been allocated before the school year starts. So when we hear a 1.375% increase, you know, my first response is great, that'll help us balance the budget. And it's still good because it, you know, it allows us to increase the pay of our teachers and support staff. But in essence, those funds are allocated before the year starts and or cannot be used to help offset any shortfalls. So it's something to keep in mind.
How is our student count for the current year that we're in, Billy?
They dropped in February. Our MFP revenues went down by about 1.5 million for the second half of the year. It was about in the 280 range in terms of a decrease. And it was pretty typical for what was experienced across the state. Just a lot of the school districts experienced decreases as well.
Really?
Yes, ours was in the 280 range, and as I mentioned, our revenues would take a reduction of about $1.5 million, $1.5 million.
That's what I was gonna ask, what they do with that extra money, that they don't have to spend because the student population went down?
67 million.
Wow, so they keep it in the general fund, I guess. Okay, any additional questions? If not, let's go to page 12. We're just gonna give you another analogy to point out, and we've done this in the past, and it's very consistent again. What we're trying to do here, of the total expenditures of about 270 million, we're trying to break it out. What's our total salaries? What's our total benefits? How much is for personnel expenditures? And then how much is for, I'm gonna call it other overhead expenses? And let's look at salaries and employee benefits. This year is 220,673 of the 270 million. That's 81.5%. Last year was 80.5%. Year before that was 81%. Year before that was 82%. So it hovers in the 80 to 81 to 82%, as you can see every year, for our personnel expenditures and related benefits. Now, other expenditures for instructional materials and supplies, and you can see the numbers there, they have been hovering in the 4% range for the earlier 2 years. Then last year was down to 3.35. We're down again to 7,847,000 or 2.91% of our total expenditures. Repairs, those hover around the 6 million range, 6.5 million range, as you can see every year, somewhere around 2.3% of our total expenditures. Utilities and telephone, again, that number is about 2.5 to this year 2.31. So about 2.5% of our total expenditures, or about $6 million, goes for utilities and telephone. Insurance, that hovers this year 2.4 million. Last year was 2.1 million, and in the prior 2 years about $1.9 million. Contracted services, that number went up from 7.9 million, and of course the year before that went up from 4.7 million, and this year we're at $9,270,000. I think we hired 36 resource officers, and I think that's part of why we're seeing an increase again here. This was done in 18. From 18 to 19 is where you see the jump, and we hired quite a few officers, which I think was the right thing to do, but be that as it may, you can see the cost of it. Appropriation to charter schools, you can see the numbers. We talked about the 13.5 million in this year. It was right at 13 million last year, and it represents about 5% of your budget, 4.9 to 5% of the budget of the total general fund expenditures. And in other, which is a catch-all, but that runs about 1.67. So when we talk about our cutting a budget and doing certain things, you can see the 82 cents on every dollar that's spent is on personnel and related benefits. And in a lot of these other items, in that other 18%, are pretty consistent in the form of utilities or telephone or certain appropriations to charter schools. You don't have much play here, and if you try and cut things, and I know y'all all know this, but it is there. So when you hear certain things, well, we cut this out, but it doesn't make a whole big effect unless you cut the big items, which is in the personnel expenditures. Any questions on this particular page? Okay, we've already covered 14, and I'm going to skip over now to 19. And I'm not going to spend a whole lot of time on this. We give you some comparisons to St. Tammany and to Calcasieu based on a snapshot of the financial position. This does include all fixed assets owned by the system, which is all the buildings and of course all of the related equipment. But the big thing that I want to mention is, look at the bottom, the net position. Everybody's deficit. It's because here we're including the future benefits that'll have to be paid for the Opeb and for the pension plan. Remember, it's a state pension, but you guys have to pick up your share of the liabilities. And I just want to show you, I mean, if you look at that page in your report, which is mandated to be presented, it shows a huge deficit of 541 million on unrestricted, very much at the last part of the page, or the last item on the page. And you can see our net position is a deficit of 380 million. Compared to Calcasieu, and the Calcasieu is the 19 numbers, 2020, I don't think it's even been issued as we speak, because of the hurricanes that they encountered this year. But theirs for last year in 19 was 786 million. These are huge numbers. And in this year in St. Tammany, they're at 407 million. So again, we all give you some comparisons to that. So I just wanted to point that out. We're better than some of the others as far as the deficit, but the deficit is just humongous. And it's something that we're required to present. But in my opinion, you're going to pay this as you go, and all of these systems are paying it as you go. The general fund is a better barometer of where we are. Okay, on pages 20 and 21, I don't know that we need to spend a whole lot of time on this, but I just want to show you some comparisons of the amount of revenues that we bring in versus per pupil versus what Calcasieu did. And again, Calcasieu is 19, St. Tammany is 20. look at towards the bottom half of the page, total general fund revenues, and this is in the same format that we looked at your 4-page comparison. The general fund revenues last year in 2020, we brought in $10,137 per pupil. In Calcasieu in 19, they brought in $11,170, and St. Tammany is at $11,318. So St. Tammany is about $1,200 more than we are, and the majority of this, or the bulk of it, is in the form of what they get from the state. And again, we've talked about this and the way this formula works. We're considered to be a quote-unquote rich parish. St. Tammany is not so, and so consequently they get more per pupil. If you look at their numbers, state public fund equalization, they got $5,683 per pupil. We got $4,300, so we got $1,300 less. But you see what we're contributing from a parish standpoint, we're at $57.20 per pupil, they're at $55.58. So they're close to where we are, but they get a significant amount of money more money from the state. And you have a lot of the information as far as their ad valorem tax millage. They're higher than Lafayette Parish. They're at 50.51 towards that bottom half of the page, and we're at 33.56. The sales tax rate is consistent at 2%. Outstanding bonded debt, we're at $251 million. They're at $273 million. And the ad valorem tax millage, of course, is shown, and the sales tax just as a comparison. Number of schools is another factor. St. Tammany is at 56 schools. They have 8 high schools. We have 9. We have a total of 45 schools. So we have 11 schools less than them. And you can see our population, they're at 38,700. We're at 31,900. So they're approximately 7,000 more pupils than we are. Population of the parish is very consistent. They're at 260,000. We're at 244,000. Look at the number of teachers. Now, granted, they have more pupils, but the number of teachers is 2673. We're at 1961. Again, just some comparison numbers to some of the more relative parishes relative to us in size and student population. Page 21 is the expenditures. Obviously, if we don't get as much money, we can't spend as much money on our pupils. And consequently, again, the same analogy, look at the instruction expenditures. St. Tammany is spending $6,584 per pupil. We're spending $5,839 per pupil. I'm going to skip over Calcasieu, but theirs is relative as well. They're above both of Lafayette and St. Tammany from 19 as far as what they're spending per pupil. And then student-related expenditures, we're at $3,000. St. Tammany's at $3,400. So we're spending about $8,800 per pupil. St. Tammany's at $10,024. So they're $1,200. They're getting $1,200 or $1,300 more than us from the state, and they're spending it more than we are. And in a total general fund expenditures, we're spending $9,293. They're at $10,503 per pupil. But look at the surplus or the excess available per pupil. We're at $844. They're at $815. And the pupil-teacher ratio, they're at 14.5 pupils, pupil-teacher ratio, 14.5 to 1. We're at 16.3 to 1. Again, a lot of analogies. We also have the relative numbers for 2019, but I think you can see the pattern. We've talked about this before. There's not a whole lot that can be done with the current formulation that's in place to distribute the state monies. Okay, the very last thing that I want to look at is on page 22. And again, this is an important thing to look at from a standpoint of how strong is our general fund, how much do we have available. We've looked at the numbers, how much we have in surplus. Fund balance, we're at $60 million this year. We're at $57 million last year. In that number, I then take and divide that number by the total amount of our expenditures. And you can see the monthly expenditures are $22 million, and we have a total expenditure for the year $270 million. So we're spending $22 million a month. We have $60 million in reserves. What does that equate to? Approximate number of months that we have available of cushion. We should be at 2.5. We're at 2.7 when you add everything in. We were at 2.6 last year. So we're at 71 days. As your policy says, you must be at least 75 days. Last year we were at 78. Look at Calcasieu. They're at 51 days, less than the recommended minimum of 60 days. Now, St. Tammany is increasing 102 days last year. They were at 108 days this year. So they're at 3.6 months. They're about 100 days. So it just gives you a comparison. We're still good. We're within the policy, and we have money set aside for our construction going forward for self-funded. Any questions? Okay. Hearing none, we'd again like to thank you all again for allowing us to work with this board and with your administrative staff this year to conduct this audit. It's certainly appreciated, and we'd love to continue to do business with the school system, and we appreciate your business. Thank you.
Thank you, Mr. Colder. Thank you and your staff. We appreciate all what you do. Thank you. If there's no further business, I'll go ahead and adjourn this workshop.